Good evening and welcome to the Australian Stock Market Show. My quote for tonight comes from Mark Twain, who was an American writer, humorist, entrepreneur, publisher and lecturer, and he said, "Everything has its limit. Iron ore cannot be educated into gold." So true, and it illustrates a great point. When considering what iron ore has meant over the decades to the Australian economy, this metal has clearly been better than gold for our GDP. But most important of all, things you can draw from this quote is a question to ask yourself, what is my limit? I would like to share with you there is no limit to what you can learn, only the limit you place on yourself, and there is no limit to what you can achieve in the stock market when you choose to get educated. So, in the spirit of learning about one of Australia's most important resources and how to profit from it, tonight Dale and I, in our no BS approach to all things stock market, are going to take a look at 5 of the best iron ore miners for good growth and income, and whether now is the time to buy. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Good evening, Mr. Gillham.
Good evening, Ms. Cox. How you doing?
How are you? Good, thank you.
I was thinking before when you came in, I thought, I haven't seen you in a whole week.
I know, I really missed you yesterday. When I was thinking I should call you, and then I was just so busy.
I know, it's like from being together 5 days a week for so many years, it's this working from home. I struggle a little bit sometimes because I'm normally used to leaning over and going, hey, what's going on with this stock and what's going on with that stock?
Yeah, I know.
So, but have you been staying out of the wet?
Oh yeah, look, I mean, but I couldn't avoid it last week. I did actually I looked like a drowned rat at one stage. Most of the time I stayed out of it, but I couldn't avoid it at one stage, and I was hoping that my daughter wouldn't kick up a fight when I put her in the car seat because I was out in the elements.
Out in the elements.
But you know, I managed to get the mobile phone out, and that always works if you can bring the wiggles up.
Oh, yes, Wiggles works for me all the time. My wife plays it for me all the time, so if she wants me to be quiet, put the Wiggles on.
It's beautiful.
Cool. All right, well, we better get into the show. But before we get into our first segment for tonight, again, we're going to take some live calls on the show. So if you want to chat with Janine and I to ask us a question that has been on your mind, then this is your opportunity to pick up your phone and call us now. We generally want to support you, so please show your support for us and the show. The number you need to call is 0392 909988. That is 03 for Melbourne. 929-09988 to get things started. The first person to call into the show right now will get a free copy of my latest book, if I put up the right way, Accelerate Your Wealth. And so pick up your phone and get dialing now. I know Janine is really looking forward to chatting with everybody.
While we wait for you to call, it is the 3rd Tuesday in the month, and this means that we take a look at the world market. So let's get into the charts.
All right, on the screen right now is the watch list for the all the world indices, all the major ones, and that's the yearly returns, isn't it? You've got
it is. There. Look, just before we get into this, I have to know. You were talking about the wiggles before, and I just have to know what colour wiggle would you be?
I'd be the blue one.
Okay, why's that?
Because he plays a Maton electric guitar.
Oh, that's
Actually,
right.
they play Maton.
A kindred spirit.
Maton 500. I think it's I don't know, MS 500s.
Now, there's a bit of trivia I'm sure that you guys didn't know.
Australian guitars. The Wiggles play Australian electric guitars.
Wow,
Australian-made electric
fantastic.
guitars and acoustics
Thank you for
too.
that. I think we better get back to the charts.
All right, I'll shut up now.
Now, at the top of the list there, you can see that India is leading the way. So at least there's one country's market that's actually saving.
India's leading the way. Wow, that's strange, isn't it?
Fantastic. Straits Times Industrial Index is actually down 3.5%. And we can see a lot of the Asian markets are actually at the top of the board. We've got Tokyo up here at minus 5.68. The Nikkei is actually minus 7%. Now, the S&P ASX 200's down 10.5%. The Australian All Ordinary is down a little bit more, 11.9.
Not too bad.
But then, of course, we come down the list and we've got the Dow Jones actually down almost around 17%. It's recovered a little bit.
It has. It was over 21
week.
or 22%, I think, is the lowest it's been.
Yes, and then we've got the New Zealand market actually down 17%.
Yeah.
Coming down here to the S&P 500, we're down 22.8%.
That's good, because that was down at 27 or 28% or something.
Yep, and jumping through the Hang Seng, we're going to show a chart of the Hang Seng shortly.
Good.
So I've jumped down to the Nasdaq Composite, down 31.76%.
Tech is on the nose, isn't it?
Still.
Very much on the nose, tech is. And I mean, that's understanding why the S&P 500 is down, because if I was saying yesterday on our market report that the top 10 stocks in the S&P 500, there's quite a few tech stocks in that are dragging that index down, whereas the Dow doesn't have as many tech stocks in it.
Look, whether it's our market or their market, I mean, whether it's tech stocks, material stocks, there are huge opportunities just sitting there waiting, aren't there?
Huge. But that's the difference between our market is, our market is top heavy with materials and financials. The US market is more top heavy with tech rather than that. So we're different markets. So if you're looking at those different charts, and like I was showing comparison between our XAO or All Ords and the S&P 500, both with 500 stocks, they're both unfolding differently, and so is the Dow. So it'd be interesting to show everybody the Dow chart today.
It will.
So what are we looking at?
So let's get into, well, first one I wanted to look at is actually the NASDAQ 100 technology sector. And you can see there, we were expecting there was a potential of around 64%. So we thought that worst case scenario, this market could fall all the way down to 61.5% or around that 60 odd percent. But at the moment, it's broken through that low. That was an important low at about 40%. And if I just drag this down here further, we can see that it's actually gone to around 47.5%, 47.6% from the high. Now that's huge, isn't it? That's see huge. A market fall like that. Now remembering that the fall back here in the GFC was actually only 60%, we're getting into that sort of area.
Yeah, but you've got to look after, you're talking about the angle this was on prior to the COVID meltdown. If we just put a bit of a sort of a trend line on that, it's roughly going back to its momentum, whereas COVID meltdown through here, everybody jumped into tech because, it was obviously everybody's buying new, computers, monitors, webcams, microphones to do all these Zoom chats, which I absolutely hate now. I'm sick of Zoom chats, but I'm zoomed out, if that makes sense.
That's great.
Zoomed out of the Zoom chats. But all this stuff and software and all things you had to do for working from home, and so tech really did take off. But it's just really coming back to a more sustainable trend, and that's really all that's happening right now.
So do you think it'll hit that around that 60% mark, or do you think it's very close to turning?
I think it's close to turning. I don't think it'll go that deep. I think it's washing out right at the moment. I think we'll probably see a bit better 2023. I know that's a real strange thing for me to say. I mean, I know a lot of people go, but what about the US market, and what about CPI, and what about interest rates, and what about blah, 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 blah. But that's what Buffett talks about. It's like when it's all that crap in the noise in the marketplace, that's when you should look at buying.
That's when it's being exhausted.
That's when it's being exhausted. And so, the big end of town are wanting to keep pushing this barrow. So everybody's selling and they can start accumulating.
Well, look, let's just move on to the next one quickly.
Yeah.
So we've got the Hang Seng there. That's almost finished its fall by the look of that.
Yep.
And then the Dow, you're expecting that could turn up from here, but there's still a little bit potential downside there.
There's possibly a little bit more downside on the Dow too. That's what I'm expecting.
Okay.
There's also more downside on our market, quite possibly, but you never know. We may have hit the bottom.
That's true. Well, that's it for our thoughts on world markets. Now it's time to get into our first email for the night.
Okay, our first email question is from Rick, who says, "Hi Janine and Dale, is a float when the company creates some shares for sale at a set price to get more funding. When you buy them at that price and they seem to go down in value after that. Thanks, Rick." Good question. I know a lot of people don't know what floats are and things like that, and essentially it's correct. It's just the company raising money because you have an initial float, but then you can also have capital raisings after that, can't you?
That's right, yeah.
So in terms of initial floats, we had Telstra had an initial float, so the Combank, so did Qantas, so these were big government ones, and Telstra had subsequent transfers of floats as well from that point of view, but then there's capital raising. But I don't know, floats, about 50% of floats you can buy in that first 12 months lower than the price that it lists on the ASX. That's statistically proven, but they don't always go down on the float price, do they? Really?
No,
I don't necessarily agree with that
Which
statement.
ones went down initially? I mean, I can't remember. Myer, there was a big hoo-ha about Myer, wasn't there, initially?
Yeah.
I think it rose for a while, but then it plummeted significantly for a long time.
But even if you take a real classic example of AMP where it listed. Now, you're not going to get the same pricing today because they've shot off other companies and their data's been adjusted. But the day it floated, it shot up to $45 a share, and then it turned around and closed then I think around $20-something or $22.
It was crazy, wasn't it?
It was crazy. Just went shot up and shot down in that first week, and then
that's more typical of what could happen for some of those more speculative ones. And yet
correct, but what I'm getting at is the float price of that. What people would have bought it off the prospectus wasn't that price; it was lower.
Yeah, that's
so
right.
So sometimes you'll see it jump onto the market, jump up and come down, but the actual price they pay off the prospectus is a little bit different.
Yeah, I mean, look, there were huge floats, weren't there, back in the 90s? We don't see them so much now.
Massive amounts, like as I said, Qantas, Telstra, and
there was
Combank,
just a lot of small
in the
stocks
90s.
Floating.
Yeah, but I don't buy floats, and I know you don't buy floats. And if it was a government float, I'm more interested in it. But if it's not a government float, I'm not that interested in it because I'd rather see it traded on a market before I start buying. Yeah. Because until float prices, and I call the prospectus a marketing document, it's put together by a marketing team to get people to buy the stock rather than telling you all the truth, if that makes sense.
But there are certain rules around how they can do that and regulations.
They can, but remember that brothel that floated in Melbourne in the 90s?
Gosh, yep.
I can't remember what the name of it was. It was like it listed and it lasted a week before it went belly up and delisted. And yet all the things that it ticked all the little boxes, and people go, oh, I'm going to buy this, I'm buying a brothel. I'm like, why would you want to buy a brothel?
So how does that even happen that they got it on there?
Correct. How does that happen if they do that? And literally it lasted about a week and it just wiped and everybody lost their money.
Well, I can understand it happening back then, but I'd find it hard to believe that the same thing could happen today.
Anything's possible, isn't it? We had GameStop last year, didn't we?
Well,
early
that's
last
true.
year.
Yeah.
That sort of stuff going on. So anything can happen if you get enough people behind it.
All right, before we get into our next email, if you enjoy watching our show, then hit that like button now. Our next email is from Keenan. Just wondering if you can touch on the HIO situation at the moment. I bought it at 3.5 cents. Do you think the company will bounce back eventually, or it's the end? Thanks. Interesting question. Let's have a look at that chart now.
You can answer it.
All right. So, look, I mean, this is tough, isn't it? The stock has been hit that hard. The company's market cap, when I looked at it today, was actually 72 million. It's actually got part of the news around why it's been hit so hard is because of now this is an iron ore company actually that have a project that is touted to have this really high grade iron ore. Now the project started with a forecast of 10 million tonnes per annum and it was adjusted, I think it was last year, I can't remember, 2021 to 20 million tonnes per annum. Now they've actually upped the the potential from that project is a 480 million tonne resource sitting there, but the project's now been delayed. So this is,
that's why
you're talking about a time where the market's not going to be kind to anything like this. It's a stock that is lower on the liquidity scale, so it's going to be hit hard if there is something that goes wrong. And that's really what's important for investors, I think, to understand that when things go right, these stocks could go ballistic. But if some news comes out and it's adverse, then the market will punish the company. But they
did, didn't they?
But I think it's actually really a good decision that the board are making, given the fluid situation with iron ore pricing at the moment, what's happening around the world. I think that it's probably they've reviewed their project and decided to actually, by the look of it, invest more to do a better project and get more out of this particular area in terms of iron ore. I think it's prudent what they're doing, and I just think the market's over punishing them. But apparently the price has gone back down to around the level where it was in 2020.
But to me, this is one of those stocks. If you can't handle the heat, don't get into the kitchen. Because if you look at this big move here, look, we're going there from like 20 cents in March this year all the way up to $1 in May. Like that's hugely volatile. So, and people were speculating on all sorts of stuff happening probably at the time. And so when it didn't come about, it did completely the opposite. So to me, it's like you got to take the good with the bad. You really do. If you're going to trade a stock,
you would trade it, not sit on it, wouldn't you?
And people do. They'll read stuff and say this stock's going to do this and it's going to do that, and they've hit this and blah blah blah. And here's some testing that says this. And then you see this stock go off like a rocket. Then everybody's talking about it in chat forums, and then people jump on it just before it goes. Oh no, we're not doing that now. This is happening and this is happening, and just tanks. And I've seen this millions of times.
Exactly.
But again, know what
so
you're
look,
doing.
you know, I still think that it's got good prospects going forward, but right now, would you buy it? No, it's too risky.
Yeah.
All right, it looks like we have a caller on the line, Dale. Welcome to the Australian Stock Market Show. You have Dale and Janine here. Who do I have on the line, please?
Oh, my name is Jackie.
Hello, Jackie, another lady. Fantastic. Welcome to the show.
Janine.
Oh, you're excited. What stock have you got for us tonight, and what question have you got about the stock?
I'd like to your thoughts on Insurance Australia, IAG,
Okay.
and whether it's too early to get into them.
Okay.
They look like they're starting to bottom.
Right. Are you looking for medium term, short term, or long term with your strategy?
Really medium.
Medium term. And have you got rules around when you're buying and selling?
Well, I'm thinking if they go over that high of 493, maybe wait a couple of weeks and if it comes back down and goes up again.
So did you get a copy of Dale's book?
No.
Okay.
Well, she's got one now.
You've got one now because you've called in. So I think that's going to help a great deal when making those decisions. So thank you so much, Jackie, for calling into the show, and we'll answer your question. All right. Insurance Australia Group. Now, I think it looks quite good.
I think it looks good too.
But for me to convince everybody in our investment team that that's the case, it's a hard yakka.
And you're not looking at me because it's not me you have to convince.
That's right.
I understand that.
Yeah.
Because, but it is understandable because insurance companies have, can I say, a history of disappointing.
Oh, they do.
You know, I mean, QBE, classic example, and AMP, the other one.
Yes.
Both two classic examples. And obviously with all obviously IAG, the difference, they all do slightly different insurances and have different business models, but geez, I like this thing at the moment.
Yeah, I do too.
I really do like it at the moment. Do you want to have a look at it all a bit?
Yeah, I think perhaps look at the monthly chart because it's, you know, Jackie was talking about big picture, long term. I mean, if you're looking at this, the trend has obviously been down for a long time and it's not definite, but it may be starting to move back up. This is a sort of an early indication that the longer term trend could turn again, could be turning now. It's only been up for it's 4 months up from the low. So, I mean, that's a reasonable amount of time. The risk with it is, it's been a number of times it's sort of been stuck around this sort of level. It tends to trade up to around that 550 mark and then it turned a number of times over here. We can see that also across here it's got stuck around 520, so it could be in that zone and it might peak out temporarily, and that will be really the proof in the pudding, won't it, as to whether the low is in or not. But I mean, there are a number of reasons why you could trade it really when just looking at it, even on the weekly chart there. So right now the trend is up, which is nice on the weekly chart, so that looks really good. Yeah, I like it.
That's good. I mean, I like it, but I don't generally buy insurance. I don't buy insurance companies.
Look, a lot of people don't put them in their portfolios. I mean, a lot of people won't buy, Qantas and stocks like that.
I've never bought Qantas in my life.
And they won't buy insurance companies. It's more sticking with the tried and true, the stocks that tend to run and be more reliable in the trend. These stocks can, like you say, they can just turn real quick on news. So.
Yeah, I totally agree. But I do like it. So Jackie's done really, really well. But we do have another caller on the line, Janine. Welcome to the Australian Stock Market Show. You're on with Janine and Dale. Who have I got on the line?
Yeah, hi. It's Dave. How are you, Dale?
I'm fantastic. Dave, you looking after yourself?
I am.
Good
Stock of the week.
Good. Good. You got a question for us tonight?
Yeah, Domino's Pizza, DMP.
Yep, no problem.
Well, I bought it yesterday at $55. I've got a target of $85, $90.
Yep.
I wanted to get your thoughts. I bought it because it appears that it looks like it's trending up at the moment.
Yep. So what rules did you buy it on?
Well, I bought it at 55. Stop loss is 50.
Yeah, but that's not rules. What rules did you buy it on?
I've been watching it for a while, and like I said, it looks like it's been trending up.
Yep.
And it appeared it bottomed out there last week. It hit its 52-week low.
Okay, so you're just thinking it's trending up at the moment, and you're looking at around about $85 for it. as a...
Yeah.
Okay, no, that's okay. They're not necessarily solid rules. Did you do much in terms of fundamental analysis on it, looking at his, dividend yields, EPS, PE ratios, that sort of stuff?
Yeah, I did.
Yep.
I'd done the fundamentals. That was the main reason it attracted me to it.
Okay, cool.
Initially. So,
Cool. I feel a little bit better now.
And I think in this market, I think Domino's Pizza's, I don't think it's going to, I think it won't go anywhere soon, $5 pizza.
Yeah, well, everybody likes pizza, don't they? I'm not sure whether everybody likes Domino's, but everybody likes pizza. Janine's got it up now. We'll have a look at it.
Cheers, guys. No worries. Much appreciated.
Thanks, Dave, for calling in. You take care, mate.
All right. As you can see, I've got Domino's Pizza on the screen there.
Yeah.
Now, I mean, we've talked about this a number of times, haven't we? We've been following it, and we did chat about Domino's Pizza when it went through this low, I think. And we said, okay, the downtrend's still on its way, so therefore it's too early to be looking at it. But right now,
I still think it's too early.
It's still too early. The direction's still down here, but it's just starting to break above a potential move.
Yeah.
So that could be an early indication that the trend's changing, but I can't see how he had any rule, like you said, to get into it.
Yeah, I mean, obviously, Dave, that's why I asked him, I kept pushing him for a little bit, because there's no technical rule there.
Yeah.
That's not trending up yet. That's definitely not trending up.
He's just using a bit of gut feel.
He's using a bit of gut feel, and that's why when he said, he's done some research fundamentally with his EPS, dividend yields, PE ratios, that sort of stuff, which made him look at that. So, but I did forget to ask him whether it was medium or long term. So, but if he's more medium to longer term and it's got good fundamentals, then I don't have a problem with that. But technically, I don't see a reason to buy it yet. Do you?
Yeah, no, not at all.
Okay, well, thanks for that. Thanks for giving us the call, and that's it for Domino's. But Janine, it's time to get in with our topic for tonight. But before we do now, I think it's time for everyone to give the show a big thumbs up to show the team that they like and appreciate all the work that goes into producing this show each and every week. So make sure you click that like button now. Let's see if we can get a record. Now, tonight's topic, Janine, is all about a handful of the best companies on our market that are capable of providing high double-digit growth and above market income. So we'll take a good look at the best ASX iron ore miners and the prospects ahead for everyone.
Now, I'm so excited about this one. Looking at opportunities in mining stocks and commodities is my passion.
Janine, I get the passion about... I get all that whole passion, but the passion about iron ore? I mean, seriously? Iron ore mining is your passion?
Okay.
Yeah, I mean, I get passionate about a lot of things, but iron ore is just not one of those things that I get passionate about. Jeez.
Why is this suddenly about you? I'm having a bit of a deja vu moment here.
I don't know what you call it, Janine, but I'm really excited about what we're going to share with everyone so they can see how much money can be made in trading these commodity stocks.
Okay, I know you are as keen as they are, so however, I think it's important that we understand the underlying commodity that these companies generate revenue from.
Okay. Well, there's so much money that can be made from trading these shares. Seriously, so much money.
You're very pushy tonight, aren't you? I can just see that. I wanted to let you know that I've got my boxing gloves ready, right here, ready for anything. But Dale, before we get into the stock opportunities, it's important to understand what the iron ore price chart indicates. So let's take a look at the charts. You're going to want to see this.
I am? Okay. Yeah. Well, let's go and have a look at it. So on your screen right now is a chart of the price of iron ore.
Now, the chart demonstrates just how high the price volatility of commodities can be. You'll notice what we are displaying goes back around 2 decades, and it's worth taking a look to really gain an appreciation for just how volatile commodities like iron ore can be.
Okay, so you're right about this. It really is interesting. Now, notice on the left hand of the screen how iron ore peaked in early 2011 and fell around 47%, then rose around 55% in early 2013, before falling around 74% into the low in 2015. Now, it's tough for the mining companies dealing with the volatility in price, and we'll have a look at the stocks shortly to see how they fared and where they are likely to be headed. Now, let's talk about the most recent moves in the iron ore price, as this tells us where it's likely to be headed.
This is getting even more interesting because understanding this and having the knowledge to do the analysis helps you work out where the price is likely to head from here, and any change in direction will influence the price of the stock. So I'm so excited about getting into the detail on the charts.
Well, anyone would think you're about to watch your favourite footy team win a grand final. Did I say go Cats?
Oh, geez. Well, with my team, there isn't much chance of that happening for years.
Well, how many times have I told you you're just barracking for the wrong team, Janine. You're just really barracking for the wrong team.
How about we get back to the charts?
Okay, your call. Now, I was thinking about the Mighty Cats doing a three-peat by winning the 2023 Grand Final and 2024 Grand Final, Janine.
Well, isn't that thing gathering dust by now? You've got this hat sitting there still on the bench in the office, and I thought it'd be away by now.
And the poster on the wall, and my scarf, and my stubby holder and everything else. They're getting well used at the moment.
They are.
God. All right. I've had my moment in the sun. Can we get back to the charts, Janine?
Okay, at last. Now, Dale, notice the fall from the high of around $215 in June 2021 was around 58% to a low in November, which is comparable to previous moves. But remember how the media blew this up?
Yep, I remember that one. So did they ever? You would have thought the sky was falling in. And
actually, Dale, the degree of the fall from the high in June did surprise me, but then it rose 63% to March 2022. Nothing out of the ordinary there, except the speed of the fall from June 2021. Iron ore recently slipped back below $100, so my target of around $70 to $80 is realistic. However, we always need to keep an open mind as the fall could stop prior to this level, or alternatively, it may break to a lower level. So that's all for now on the price of iron ore.
Okay, well, look, it's been a tough time for iron ore and the miners. However, they have not been as volatile as the commodity has been.
So true, Dale. Can you imagine trying to get a budget with the price moving around like that?
Well, that means, well, the miners can lock in contracts at particular prices, which helps, but it's really a double-edged sword. I mean, China's COVID lockdowns and their slowing economic growth have really weighed on iron ore, as the demand for iron ore, or for that steel production that they're doing, really has fallen, and most of the iron ore is used for making steel. I mean, how much iron ore really goes to China?
Well, a lot actually, and data indicates that approximately 80% of Australian iron ore exports went to China.
Seriously? So we've looked at iron ore and how that price has moved, but how have the underlying stocks fared through the volatility? Now, how about we take a look at our top 5 iron ore stocks for growth and income?
Your patience has paid off. This is the best part, and first up is one of my favourite companies. Can you guess which stock it is?
RIO? BHP?
You're supposed to say that's easy.
Okay. Can I say any of that? BHP, can we just get to the charts? Do I have to keep guessing?
Yeah, we can.
Okay. All right, so on the charts, well, that's not a chart, that's a watch list.
I know, I've just tricked you. Now, I've just thrown this in as an extra little goodie for everybody to have a look at. So what we've got here, if I change this and we can see the market cap of the biggest one, BHP Group, you can see obviously that's the biggest company and it goes down the list. And I've got a number of iron ore. I've actually got more than 5 on there too, which you didn't notice straight up. Does that surprise you?
It does not surprise me.
Okay.
I call it the Janine dozen.
Okay, well, Janine doesn't. You can also see the dividend yield for each security on the right-hand side. Now, the data that you see for dividend yields varies a lot depending on what their data is. So dividend yields can sometimes be over the past 12 months.
Yep.
They could be over the previous fiscal year for that company.
Yeah.
So this data here actually shows up to the fiscal year for each company. Yep. So looking at the list, you can see there's huge numbers there, but can you believe that they're actually going to continue to pay that out?
That's huge, especially for BHP, isn't it? I mean,
well, especially while the shares are teetering where they are too.
I think that's massive, those dividend yields.
All right, so let's take I don't think I've seen that ever in history, have you?
No, I don't think so.
Yep. All right, so let's now go to the chart of BHP. Now, you'll see all of these little lines on my chart. It looks quite neat, doesn't it?
It does look fantastic.
For me, yes. you're supposed to say.
For you, yeah, it looks really, really neat.
Okay,
What else do you want me to say?
So the market cap we said before is about 200 billion. So obviously huge, the biggest iron ore miner on our market. Now, the amount of revenue that they get from China is around 60%. So 60% of BHP's revenue apparently comes from their dealings with China. Now, according to the media, some data in the media, many of the iron ore shipments that have gone, they've continued to sort of keep pace with what expectations were.
Yep.
I know that RIO actually disappointed the market earlier in the year, but that may change. We don't know whether they'll come out and they'll meet the market's expectations or not. But at the moment, BHP's been holding steady, so I can only figure that whatever's known out there is not disappointing the market. But I'd actually like to see BHP fall, even though it is my favourite stock next to RIO. I'd like to see it fall to around $29, $30, just to make sure that this it doesn't just continue to fluff around. Sometimes stocks need to fall, as you know, before we actually get the decent turn, and then they've got the momentum to be able to get through these highs, because that actually creates a lot of resistance to the rise. But if we saw a move through this line I've got marked here, then that could indicate that it is going to move up to make that challenge. But at the moment, the price is down about 18% from that high. And, we've got this low here below November 2021 as a potential.
If BHP's falling, that will hold our market back a bit.
Yeah, well, that's right. So the financials are actually looking good at the moment. So we've seen this before, where financials have risen and miners have fallen, and we've seen the opposite as well.
We saw the opposite as well.
That's what I'd like to see initially, and then for the miners to come back in 2023 and then take off again. That'll give more certainty to the upside.
So you want to see, well, basically, so you're saying to people need to be a little bit more selective now.
I think so. And look, I think there's some huge opportunity. Long-term investors, if they're in this, I still think they're great stocks long-term.
Yeah.
Paying good dividends, great companies. If you're buying in the top 20, we've always said, it's okay to be doing that.
If you've got a 10-year outlook on BHP, that's what you're saying. If you've got a 10-year outlook, you'll do well.
I think so, but when you say 10 years, you and I both know that markets and stocks move in cycles, so
correct.
You can't say exactly 10 years. You've got to say, well, okay, let's have a look at that cycle and see, can we hold it for 6 years and be reasonably confident that it's going to be going up rather than in the decline. So that's BHP.
Okay, so RIO?
Now RIO, looking at RIO shorter term, it actually looks like it's found some nice support across here. You can see on the weekly chart, which looks good. I'd still like to see it have one more move down, but that may be it for RIO. You're shaking your head there.
No, I'm just clearing out the mud in my head.
Okay. I thought you might be in disbelief.
Oh, well, I was down the Yarra River on the weekend. I tell you what,
Did you get it in your ears?
Geez, there was mud and crap everywhere. I tell you what.
Right. After the rain.
It's only down the end of the street, so I didn't have
stirs
far
it
to
up,
walk.
doesn't it?
But yeah.
All right, so looking at this, we can see that there's a short-term target around $110. Now, if it gets above that, then RIO could keep going. I'd prefer to see, there could be a bit more of a sideways move first, but I'd actually prefer to see it hit $80 or $85 and then start moving up.
If it did that would look exceptional.
If it does that, that'll be just beautiful. We'll be rubbing our hands together, but there's also a risk that it could fall a little bit lower. And we'll be able to gauge that if it continues to fall and hits that level. But, stranger things have happened, and these stocks have surprised us over the years and done the opposite sometimes to what we're expecting.
Correct.
So we just have to let the chart and the price chart tell us what's happening rather than trying to preempt it at the moment.
But RIO does look good at the moment, but as you said, it's not necessarily telling us it's going up right now.
Well, it's come so close to this low that it could just slip through it. That's the risk.
Yeah.
Okay, so then we've got FMG, market cap $52.5 billion. Now, FMG looks great, doesn't it, long term? I mean, it's outdone the other stocks, the other big miners, in terms of surpassing its high in the GFC. It's still trading above that level. But like the other stocks, I would like to see it drop below, perhaps hit around $13 before it starts to move back up. But it's actually held up much better than what I expected. For the one that's the most volatile stock, when we're talking about upside, percentage-wise though, it is quite a way down from its high compared to BHP. It's actually 36% low down from, or lower, than its highest price. But if it starts moving back up and starts trading through this sort of $20 mark, it might be heading to the high. It's just a question of risk.
This looks, I mean, I don't know, I mean, maybe you may not agree with me, but I think this looks a little bit more bearish than BHP and RIO.
Yeah, I know, and that's why I thought it would already have fallen by now.
Yeah.
I've been waiting for that to happen. When I saw this big outside bar here in June, normally FMG doesn't muck around.
No.
When you see those sort of turns, it will just start heading down. I mean, we saw a big drop here back in 2017, and then it just went sideways for a while, teetered around at that low, and then had a much bigger drop after that. So it's possible that we could see it come back down to this sort of level. Now, ideally, you want that to happen within a few months. We don't want.
Yep.
We've got dates at the end of the year where there could be turns, possibly in early 2023. So look, ideally, the faster the better, as far as I'm concerned.
Me too.
Okay, the next stock we've got is has a market cap of $2.6 billion. Now, when you're getting into the smaller end of the iron ore stocks, you know that there's going to be higher volatility. So let's just go back and have a look. The peak in the GFC was all the way down here. Big difference to RIO and BHP. Now, you'd think
Massive difference.
that BHP and RIO, with all the resources and everything that they've done through the GFC to gear up, that they would have been doing something like this. And I've looked at the long-term price charts of those stocks, and I actually see them as trading much higher than where they are. But, I mean, these smaller stocks are doing it, aren't they?
They're doing it, and that's really, really surprised me. I mean, obviously, BHP and RIO, obviously, we're benefiting more from China than FMG, but FMG also benefit. Obviously, FMG has a slightly lower grade ore than the other two, but this is fantastic, this stock.
Yeah, look, I mean, right now, it's a possibility, just the way that this has unfolded, though, it may have peaked temporarily. BHP, RIO and FMG have all had a kick back up, that we've all seen this rise. Now, it may rise up to around 650, somewhere around there, before it then comes back again, or it could just drop straight through the floor quickly. And so we've got to watch carefully each week to see whether there's a recovery coming. Now, this low here, 30 September 2022, if it takes that out, obviously, we're going to see that decline happen sooner rather than later. If it trades above this blue line here, then it could be up.
Could be up.
Especially in the short term. And, there's a decent run to that high. So if we just have a look at where this is here, and we're looking at, to the high, it's 45%. If we look at around the 650 area, it's around 16%. To that gap there, 26%. So there's a short term, but it's a bit riskier just because of where it is in the overall pattern, right? We're on the other side of the angle of the trend, remember. So that's something to bear in mind. But these are all stocks that are, this one, as we go down the lower end, the dividends start to drop off. So the level of the payout drops, but the growth is actually a bit stronger in this one. I was a bit surprised actually at the degree of the reversal that I've seen on this share. It sort of matched the prior one there. And when you see this sort of pattern unfold, you tend to think that it could fall.
It could, and that's what I'm looking at the moment. I'm thinking it probably, if you said to me, is it stronger or weaker? And I'd say right now the pendulum is very much weaker rather than stronger, and it needs to a bit to change that to be more strong.
Yeah, it's still a good size company.
But I do like it.
2.6 billion, you can't scoff at that. Now, when we get down to the lower end here, I've got Grange Resources. Yep. We've looked at this stock before. You can see that here we've got a market cap of 0.9 billion. So we're starting to get down to that lower end, and we can see the difference in this chart and how illiquid, well, it's not illiquid, but the liquidity is a lot lower than what we've seen on the other stocks. And what's interesting to me is when we go and have a look at the volume. Now, I think we just switch to the weekly chart for a minute. This is really good to see. But when you look at the liquidity that was back here, compared to what it's doing now, and yet the fall that we've seen is comparable to what's happened when it was highly illiquid.
Highly illiquid, yeah.
So its personality, you think the personality starts to change when liquidity comes back in the stock, but in this case it hasn't. However, I'm actually really pleased to see it, the way that it's fallen, and I think that we could be very close to a low with this one at the moment. We might just
get one more down move to wash it out.
Yeah, we may get a short one, but it might not be much because, I mean, we've got this, support across here. It may have already made its low, but if it takes out this low, I'd say that there's a little bit more downside before that bottom comes in.
Yeah, looks like there'd be roughly some good support around 60 cents there.
Could do, Dale, could do. But once it gets moving, it actually goes up in really nice trends. You've just got to be prepared for that volatility, so know the stock. Know how, when it rises, know how fast it rises and know how fast it falls so that you can set the appropriate strategy for it.
I think it's good advice, really, really good advice.
Now, if we come back to our watch list here and we look at the dividends, we can see that Champion Iron it's not a champion when it comes to paying out the money, whereas the other stocks have been. Grange Resources is pretty much up there with the other companies, the big miners. Mount Gibson, there was nothing registered. I don't know if that's currently the case, but you can see that Grange has still got a good dividend yield.
So now we've got the lowest market cap.
Now I put in an extra one, as you can see. This was Mount Gibson Iron, which we've talked about on the show before, which I do like in terms of the long-term formation of the chart. But if it takes out this low, well then it's anybody's guess as what's going to happen. So the low was 35 cents. I think the lowest point here has been in the 40s. No, actually 38.5 cents.
38.5 cents, yeah.
So if it takes out that low, that's really not great. But if we see a strong move up out of this point here, you could say that it's more likely to take out this high and keep going from that point. But we just need to see that settle down, don't we? Do you think it's more likely
obviously
to keep falling, or do you think it's potentially found a bottom?
Look, I'm almost 50-50 on that one. It looks like it's going to keep falling, but you never know. It could start finding a bottom because it's just obviously this last bar, if we extend that up, it's only 2 days, yesterday and today, that's it. If that was a completed weekly bar, it could be starting to show. That's monthly. Oh, it's monthly, is it? Sorry. Geez, you changed it on me, did you?
Yeah, I did. Isn't that tricky of me?
But it's half a month, isn't it? So it's not a completed month, so... Yeah,
but that's actually finding support, isn't it?
It is starting to find some support. So the down move is slowing down, but it wouldn't take much to push it a little bit lower down to that level. But I think it might be getting near the end of this run. So I don't mind that. So well done, Janine. Really, really good picks. Anything else you want to say before we finish up?
I just say keep an eye on the iron ore space. We'll come back to you at some stage with an update.
Cool. So right now you're talking about is, in summary, BHP, RIO, Fortescue, all looking really, really good, but probably
all looking
a little
good,
bit
but there's a
more
potential for downside. But just keep those on the watch list,
Cool.
because there will be some great opportunities in those stocks.
But all of them could do really, really well in the coming year. That's what you're saying.
Yes.
Cool. There you go. Now you've heard it from Janine, but that is it for our topic for tonight. So thanks, Janine, for that. Now, before we get into our next email given you at this point in the show and still watching these two crazy dudes up on camera, it means that you like what we're doing. So make sure you hit that like button now. But I also hope you have your phone ready and have been patiently waiting for the opportunity to call into the show to ask Janine and I your most burning questions. Now's the time to get dialing. The number you need to call is 039 290 9988. That's 03 for Melbourne, 9290 9988. And Janine is really champing at the bit to chat to you tonight, so get dialing now.
By the way, who are you calling a dude?
Me.
You said dudes.
Well, you're a dudette. But I'm not allowed to be gender specific, so you're making it gender specific, aren't you?
Oh,
don't I have to be woke?
I think I better take a deep breath. Yeah. While you call us, we will get into answering the next question, so call now.
Now we have a question from Reese, who says, "Hi, Dale and Janine. I was wondering if you'd take a look at James Hardie for me. It seems to have broken a downtrend. It has pulled back over the last few weeks. If it starts to rise again, I'm looking to buy in once it hits $37. Just looking for some feedback if that's a good buy. Regards, Reese." So, James Hardie, what do you reckon?
I actually am quite interested in James Hardie, looking at it long term. Now, the risk with James Hardie is if the US market keeps falling, James Hardie's more likely to keep falling.
I would suggest that, yeah.
Okay, but it's actually looks like it's trying to find support right now, but it's still too early. And the question he's really asking is if it starts to move up above that level that he's talking about, is it the opportunity to buy?
Which is around that $38 mark, isn't it?
Yeah.
Talking about? Yep.
So it's fallen to what I would say is a really important level. So there's potential there. That's the opportunity here. Yeah. So he's suggesting around, what did he say, 37?
$37, $38 or something
37, 38. So that's above this high here. So he's talking about once it gets above this high, then it should be on its way again. So I have to agree with him that there's a reasonable chance that once it takes out that high, that it could be moving up.
But to me, that pattern looks a bit strange.
Does it?
Yeah, it looks a little bit strange. I mean, I don't know. He could be 100% correct and it could take off again, but I think I'd just reserve my judgment just a tad.
Okay.
Just a chat. I think, from that point of view, it did come down to that level there, 29.48, which is pretty close to that 28.60.
How do I measure a tad?
Well, you just take a little bit and add a little bit more. Don't you know how to create a tad?
You heard it, everybody.
It's like a little, they said when you watch these cooking shows and it's just put a little
this
splash.
This is a bit like that thing that you used to say, and I used to cringe when we would be at a workshop and you would say, if it looks like a dog and it smells like a dog, then it probably is a dog, because nobody could pin you down to what the actual detail of it was. Are you doing the same thing again?
Doing the same. Well, it's like having a splash of wine in your ragu, How much is a splash of wine? A whole bottle or half,
Depends on how much you like wine, doesn't it?
Well, it does depend on how much you like wine, actually, but I don't mind this stock at the moment. But I'm just a tiny little bit reserved on my view for here, but I think it's looking good.
Okay, great.
Cool. Anyway, Janine, we do have a caller on the line. Welcome to the Australian Stock Market Show. You're on with Janine and Dale. Who have I got on the line?
Hi, Dale. It's Shane calling from Brisbane. Hi, Janine.
Hello, how are you, Shane?
Shane from
Very
Brisbane.
well.
I hope you're staying dry up there.
Yeah, we haven't got the big rain, hasn't come yet.
Oh,
So-
that's good. That's good. Hopefully you stay safe. You've got a question for us tonight?
Yes, Dale. It was about AKE,
Yep.
Allchem. It's a big lithium miner. So it's in a pretty exciting space, I guess. I'm just looking at it at the moment. Basically, done all my fundamentals on it. I've been pretty patient with it. I'm pretty much 90% cash at the moment, so I'm sort of
Not a bad thing?
yeah. It's one of the things that I've just sort of been looking at and waiting for some type of confirmation. It seems to be sort of levelling off and finding a base. But I was hoping that you might be able to look at it and see if there's any red flags there.
Okay,
Just on the chart.
okay. No problem. Are you looking more medium, long-term, short-term?
I always try and play it as short as I can, Dale, but I just let it unfold. So
Okay, so if you're looking short-term, what are your rules around exiting that stock?
I'd wait for the chart. The reasons why I got into the stock would be the inverse of that would be what would tell me to get out of it.
Yeah,
So there would be a fundamental change or a technical change.
A technical change. So what would that be? What would that confirm? Yeah?
The stop loss on this one, I'd probably ride fairly sort of tight. It'd probably be maybe just under 10% on this one.
Okay, gotcha. Cool. No, that's fine. That's fine, yeah.
I think you need to let Shane go now, because I think that he's really answered your question, and
I could have
his
a
answer
whole
was
lot
good. He
more.
said stop loss. I thought that was good.
It is a very good answer, but I'm glad I asked him the question.
Dale's good when he presses you. He makes you actually think harder. So that's a
great.
good thing.
Thank you.
Fantastic.
Thanks for the support, Shane. I'm there. I'll buy you a beer next time I'm in Brisbane. Thanks, matey. Thanks for the call. You take care.
All right, then, let's have a look at AKE.
So back in your box, girl.
It was, wasn't it? Okay, AKE, you can see there, it's gone to a new all-time high. So it's in blue sky, almost. We can see on the weekly chart, it's just pulled back a little bit from that. So is it giving you any warm and fuzzies?
I like it. I
Okay.
actually like it. I think I do like it. It's the only thing I don't like is it's so vertical. It is so vertical, but it looks good here. But these sorts of big moves, they do overheat and then they've got to come back, and it has done that. But I do like that whole look. But looking at this whole thing over the longer period of time, you can see how vertical that is, and it hasn't really sustained that for any length of time. So fundamentals are good, as he was saying. He's done his research on that, which I love. He's done all of that. 10% stop loss. Look, I don't think that's a bad idea on this sort of stock, but I do like it. I do like it.
I just want to go back to the weekly chart for a minute. I mean, from a point of view of a stop loss, looking at it from where the current price action it is, it's only 10% away to that low, which is okay. So it's a reasonable risk.
Yeah, which is also I'm saying I do like that sort of stock. And he's saying, is there any red flags that we can see? No, not at this point in time. I don't see a red flag.
What about if you waited till it went through that high? Would you for your portfolio, would you buy it there now, or would you wait until it goes through there?
I think I would wait a little bit more, because it's still, if you look at these weekly bars through here, if you're just studying it, you probably can't see it quite. Let me just delete that. You can see how it's started here. It's gapped down. That's a sign of weakness. It's traded up and down and it's closed really low on that bar. And this is only 2 days of this week. We're on a weekly chart. It gapped down again. It's tried to push up, and this hasn't made a higher than that, and it's still come down here. So it's telling me there's a lot of indecision at the moment. So that's why I'd be saying right away from this at this point in time, because you never know where it's going to end up at the week. And as they say, the professionals close the market. If this closes down somewhere lower on this bar, somewhere in here, or even lower than what that sort of stuff, then I think that low there, 13.18, would be very serious trouble of being broken. So at the moment, I'd be really cautious. But if it broke through that, I'd be happy.
Okay.
I'd be happy. I'm just a bit cautious, because, and that's really where Shane was saying he wants to trade short term. And that's really where you've got to have when you're trading short term, you have to have a really good entry and a good exit. Yep. We're not talking about just trading on fundamentals where you're looking for medium to longer term stuff. So you've got to have both entries and exits.
I'm just wondering if it's close to it, pretty close to where it's going to top out. So I'd just be a little bit mindful of that.
It could be. And that's the thing is, I think that was probably my next bit of a statement is I don't think he's done enough technical analysis on it. Whether Shane knows how to do that or not, I don't know. But I think I would be doing a lot more technical analysis, which is why that verticalness of this stock, which I said earlier, this is a massive run. So I don't think how long is that going to go. But because he said short term, I'm not as concerned.
That's different.
If he said medium to longer term, I'd be going no.
Okay. All right, fantastic. Our next email is from Steve. Hi, Dale and Janine. I'm in the early stages of the Trading Mentor course. Oh, congratulations. And learning heaps while reviewing company charts. I've noticed peaks in trading volumes for various companies and was hopeful that you might like to touch on this, and also why companies might undertake share buybacks. Kind regards, Steve. It's interesting, isn't it, with the volume spikes that we often see there. I mean, he's so observant, the fact that he's finding this stuff already.
I know people, just some of the stuff in the first couple of lessons, people go, wow, I didn't realise how much they can learn in the first lesson and the first couple of lessons of the Trading Mentor, because it really starts to show them how to work out some of this sort of stuff and work out what the market's thinking, and rather than them reacting to it. So peaks and troughs, I mean, there's different reasons for spikes in volume, and obviously peaks and troughs on the market. I mean, I know one of the ones that confuses some people is options expire at the end of the month. Yeah. So people see spikes in volume and that, and they go, what is that? It's just options expiry, which doesn't necessarily translate into massive change in prices of the stock. So to me, there are
I'd go back to the company announcements as well and have a look and see if there's anything obvious there.
Yep.
And just do a bit of a Google around those dates and see if you can find something.
Sometimes the spikes are institutional crossings. Like one institution is de-weighting their portfolio of a stock and another institution is picking that up, and they might do a bit of a discount or something to the current price, so that's why they do a crossing. But
sometimes it's just news.
Sometimes it's just news, sometimes it's just anything. But it's also a combination of volume and price and what it's doing and where it's sitting in there. Now, talking about raising capital too, they were talking a bit about that as well. So do you want to answer that one?
Look, I mean, I think that's a fairly general question. Do you want to start to talk about it?
I was giving you a chance. I was being
You are a gentleman.
Yeah, but companies raise capital all the time, and they do that. Sometimes they'll do that from issuing more shares. They'll do that, so they might put out an offering, and they do multiple different types of offerings. You know, they'd have preference shares, they have ordinary shares, all sorts of stuff, and that can affect the stock price a little bit. I know some stocks, you might see spikes in volume and spikes in trading when they start to announce it, and I think there was a stock just the last couple of days that announced, or last week that announced some sort of corporate action or something, and it was a price, and it moves up to that price, and then it sits there until the offer's finished. And so if you're not in early, you'll miss out on that spike in price, and obviously the volume that people are trying to get into that sort of stuff. But normal part of the market. What do you reckon?
I think you handled that really well.
You keep the pink boxing gloves at bay.
Yeah, I haven't used them at all tonight. That's quite a shock to me, actually.
I know. I'm trying to be nice tonight because people get upset with me if they think I'm rude to you.
Oh, really?
Yeah.
I don't think you're rude to me. That's just our normal banter and the way that we are.
I know, but all these people out there that think I'm mean to you some nights.
No, that's not true.
Well, I hope it's not true, because, geez. Anyway, our next email is from Hamish, who says, "Hi, guys. Love the show and the content. Don't love the Geelong Cats." What?
Fantastic.
Up the Blues. Up your Blues, that's for sure. And watching the show and learning a few tricks, I decided to enter a trade on E25 whilst waiting for the crypto bull market to return, but not holding my breath. I entered in September around 90 cents, learned a valuable lesson and then not to buy a big green candle breakout or big breakout candle and wait for the pullback so that my entry is as close to my invalidation stop loss as possible. However, it's looking good at the moment. I use technical indicators on a stock screener to come across this company and don't really know anything about it fundamentally. Now that I'm in profit, I'm looking for confluence from a few different factors to decide when to exit the position. Otherwise, I will continue to let this winner run. Can you please have a look at the chart and let me know your thoughts? Cheers, Hamish.
Now, this is one of the big challenges, isn't it? Because this stock looks amazing.
It does.
It looks like a really good pick. And I don't think I've ever seen this one before. I don't think anyone's written in about it either.
Nope.
So well done in choosing this one, Hamish, and in terms of your timing of getting in, it's been fantastic. Now,
the great thing, 90,
well, the great thing about this stock is it's actually had momentum to get through the dollar mark. So the fact that it's actually shot through $1, it puts it on the radar of different fund managers. So well done there. And I don't know what it's done to its total market capitalisation, but I'd say that it'd be a lot better, obviously, than what it was. And it looks beautiful. It's in a nice trend.
He would have been a bit nervous when he bought it because it fell away for the first week.
But that's just the volatility of it, because it just repeated that pattern 3 times before it then took off.
I do like it. I think it's a really, really good pick. I don't have any issues with it.
And he's talking about an exit. So this is the challenge, isn't it? When stocks rise so strongly, the question is, how do you actually, because it's actually gone up 71% in 2 weeks. So how do you set a stop loss for that? It's not easy. And if it's a short-term strategy, you can sometimes look for something on the daily chart, but there's nothing there either. At all. So it's really a waiting game to see if you get a bit of a slowdown in the share price and then a judgment call on how to exit. You can't use a trend line on this one just because of the acceleration, the degree of acceleration. Look, someone who's done the mentor course might have a strategy that you can use, but you've still got to wait for that to appear.
Well, this is the kind of stock, given that it's moved this fast in the last 2 weeks, that people will start seeing on chat forums.
And then it'll start to take off further.
And then it'll take off further. And obviously this volume down here is really only the 2 days, whereas that's a whole of last week. So this is only 2 days. So
look at the variation in the volume there.
Lots of variation. So it's probably got another week or 2 up, but then you've got to work out how you're going to sell it from that point of view. And I agree with his strategy. Let profits run, cut losses short.
Well, I don't think we can really tell him how to exit this one. I think he's really got to make his own judgment call on it.
Well, he made his own judgment to get in.
Yeah, he did. But we often talk about when a stock blows off like that or accelerates away to wait and trust the rules, and it will come back and give us something. Whether that's on the weekly or the daily chart, it's really your call.
But if you're not in that at the moment, would you be getting into it?
If you're not into it, no, not now, you wouldn't.
I think you missed the boat most of it, or you'll be getting in at the
halfway mark
of whatever's going on, so you'll be risking it. So well done. I think that's really, really good. But that is our thoughts on E25.
Now, you've been asking us questions, and each week we ask you for your thoughts. Last week we asked, what do you believe is the biggest stumbling block facing investors as they invest in the stock market? I was excited to see Alex quick out of the blocks. Hi team, wishing you a speedy recovery in time for yet another great show next week. Thank you for your kind wishes. And he continues, I found the biggest roadblock in my trading journey to be understanding my own psychology in uncertain times. Thanks heaps. Now, we really appreciate your comments, Alex, and we can relate to what you're saying as everyone experiences this in their early days of trading. What's important is you have to have a strategy to manage your risk, and when you trust your rules in situations where the market or global events appear uncertain, you're able to gain so much in observing yourself, and in doing so, you're building your psychology. When you trust your rules, this really helps your psychology, which is why you need good rules that you've tested yourself. Our advice is learn as much as you can and keep a trading journal right to yourself. This is a really powerful tool to assist you in learning about your own psychology.
Oh, so true, because you learn so much when you write a trading journal. I love it. We also had another comment from Donna who says, hi Dale, or hi Janine and Dale, one of the hurdles is picking the best of a good bunch. She says, I find that I watch several stocks for an entry, then one triggers, and I purchase this stock. Within a short period of time, others trigger, but I don't have available funds to enter these as well. I paper trade these and they always seem better than the one I entered. Not a bad problem to have, I guess. This is a quality problem. When there are more stocks than you have money to buy, there are ways to determine which stock. Sorry, I'm getting tongue-tied again, aren't I?
It's nearly the end of the show.
I think my mouth's going faster than my brain. Something like, because I got so many things I want to tell her.
Yeah, I know.
Anyway, but it's a really, really common problem, but how you choose one stock over another, there are better ways to do that, but it does require more knowledge and a desire to seek those answers, which you appear to have given. You have talked about paper trading, and that's a real excellent discipline to get into, so I think well done.
Thank you so much to everyone who did comment last week. I really enjoyed reading your comments after the show, so keep them coming. This week's question is, when the market starts to rise strongly, which stocks are you likely to buy? We would love to hear what you think, and you're also welcome to share what your biggest challenge is. We want to hear from you, so come on everyone, share your thoughts and get typing. If you're listening to us on a podcast, you can still send us an email with your answer. Before you do, give us a 5-star rating and review on whatever podcasting app you're using.
Now, if you enjoyed tonight's show, give the team a really big thumbs up. That means click the like button underneath our video to let us know that you've really enjoyed the show.
Now, if you want us to answer your questions, then watch our show next Tuesday between 7 and 8 p.m. Pick up the phone and give us a call, as we'd love to chat with you. If you're not able to watch live, you can email your question ahead of the show. You do this by sending your email to info@wealthwithin.com.au, and remember to include Wealth Within Live in the subject line. And there's a few people out there that have been promising me they're going to write in, and they haven't. So please do.
You should say, I know where you live and I'm coming to get you. Anyway, we really appreciate your support, and you can show yours by subscribing to our channel and hitting that subscribe button now.
Well, that is it for tonight's show. We do hope you enjoyed what we presented tonight. We've so enjoyed receiving all your emails, and thank those who called into the show. We love the opportunity to chat with you personally.
As always, thank you for joining us tonight, and we do hope you have a great week. But for now, goodbye, good luck and good trading.
And I hope we've heard the end of the cats.
Yay, cats.